Hello and welcome to Crux Investor. We spoke earlier today to Trey Vasa, who's the CEO of Ely Gold Royalties, the TSXV listed gold royalty company. And if you want to hear our thoughts and opinion on the conversation and indeed the company itself, you can find that at cruxinvestor.com/club. You can also find company reports, market commentary from experts from all around the world. There's training videos, there's summaries of other interviews that we have done, and there's a big community of investors on there sharing their thoughts and ideas with each other. And if you go now, there's a 7-day free trial. And of course, we'd love your feedback too. So do give us a like, leave your comments below, and if you want to see what we talked about, take a look in the description. Trey, how you doing, sir?
Good, how are you?
Oh, long time. Lots happened since I last saw you.
It was pre-COVID the last time we spoke, so sometime mid-March.
Yeah, it was actually. But do you know what? I tell you what it was. We had a market reset. Okay, a lot of the stocks kind of came away. This was pre-COVID, and we thought, well, that's going to be the worst thing that's going to happen this year. That didn't work out. That didn't work out so much, except for guys like you. And we're going to talk about that because gold's been on a heck of a run. Your share price has been on a heck of a run too. But if I remind you, when we spoke in March, your shares were at 59 cents. You're up around 136 today. So not bad. You happy?
Yeah, we're happy. We have been very successful this year in making some key royalty acquisitions, and that's really been what's propelling the share price.
Yeah. Well, look, before we kind of get into what you've been up to since we last spoke, why don't we set the scene for people new to this story and give us that 1-minute overview of what you are about.
So Ely Gold Royalties is a junior royalty company. We have a jurisdictional focus in Nevada, primarily, secondarily in Canada. And we focus on gold, precious metal royalties, at this point almost entirely gold. So by owning royalties that we have either purchased or generated through our property generation program, we've built quite a portfolio, and the market is really starting to pay attention to.
Yeah, it really is. And so, and again, just for people new to this story, just give us the humble beginnings. You kind of started with a kind of database of properties, and you built it up from there. But so, how did you come into that? Why did you go Nevada, and how did you start off with all of this information?
Well, our background is Nevada, where we developed a project with a partner and sold it in 2015. And we then teamed up with Jerry Bachman, who's the head of our Nevada royalty subsidiary, who has been prospecting, selling properties, and retaining royalties for over 35 years. So with Jerry's database, and then in 2017, we purchased Bill Sheriff's portfolio and his database. So we've got a long history of staking and acquiring and consolidating property packages in Nevada, selling those and retaining royalty. Now, in about 12 to 18 months ago, we started also purchasing royalties because as our stock moved up, we had access to more capital, and we got Eric Sprott involved, who helped us with a line of credit, allowing us to go out and purchase some royalties on some of Nevada's largest gold mines.
Yeah, I mean, I'm interested in that because, again, I remember when we first spoke, it was August 2019. You were doing deals, $1-2 million. And then when we spoke in March, you were quite pleased with yourself because you said, well, we can now start thinking about doing deals, $5-10 million. So moving up the food chain, as it were. So where are you at today?
Well, today we're about a $200 million market cap. We are focused on deals that really we use a discipline, if you will, of maximizing deals at about 10% of our market cap. So we're looking at transactions up as large as $20 million. But we're still not afraid to go out and purchase royalties, in that million and even sub-$1 million range that we think have tremendous long-term value.
Okay, and again, we talked about that in the past. You're saying, well, we're going after near-term revenue generating royalties. That's what's unique about us. You said that. So, given what you've just said, you're not necessarily focused on moving up the food chain in terms of the size of the deals, although you can. It looks like a kind of blended approach to the size of the transactions. Are you taking the same approach to, whether they be near term or slightly further away?
Well, because we have the royalty generation program, which has allowed us to build up a portfolio of, we have almost 40 properties in our exploration portfolio, most of which were generated through property sales. And on top of that, we have 26 properties in our development asset portfolio. And many of those were generated and some were purchased. But in the development assets, the criteria there is those properties have to be at or near producing mines or projects that are in the permitting process for building a mine. So that really allows us to cover that exploration and development stage assets with our royalty generation model, where we are actually getting paid through the property sales and retaining the royalty. That allows us then to focus our shareholder capital in our royalty acquisition program on assets that are at or near production. So in the last 12 to 18 months, we've purchased royalties, which would make up our 11 key assets, which are 9 of those are at mines that are currently producing. So we're just waiting for our properties to come online and start generating revenue. 3 of those royalties are already producing. 10 of the 11 are operated by companies that are already operating mines in the jurisdiction. And that portfolio, as I said before, it's on some of Nevada's largest gold mines and operated by some of the best operators in the gold mining business.
Okay, so how much cash are you actually generating today? Regular cash?
Cash generation for us, from a revenue standpoint, we'll do about $2.5 million in revenue this year. That should grow to about $5 million next year, and expanding to then 7 and out to 10, and by 2025 growing to over $20 million.
Okay, let's look at some of the numbers here, because I think I'm interested in the kind of rapid ascent, and he dropped off. He went up to like nearly $2 at one point, or maybe he did get to $2 at one point, and then dropped off. You're back down at sort of like 35, 36 at the moment. I mean, what do you put that down to?
Well, look, our stock has been the best performing royalty company in the entire royalty universe over the last 12 months. By a wide margin. We were actually kind of happy to see this consolidation and the stock price pull back a little bit, allowing investors to get in. But the only thing that's really moved faster than our stock price has been the net asset value of the properties we've been able to acquire. So we at a $200 million market cap, we are trading at about 1 times our net asset value. Our competitors are trading at over 2 times the net asset value. And yet, when you compare our royalty portfolio on a net asset value basis to the other companies, and you look at the quality of our portfolio, the quality of the mines that are already built and operating, and the operators that are producing at those mines, our portfolio, will literally put it up against anyone's.
Okay. Do you feel that you were well priced or overpriced at $2? Is that why it's come off, or do you think there's something more at play?
Well, look, like you said, in March we were at 60 cents. By May, we'd moved up to about 80 cents, and we did a private placement there where we brought in some new institutional shareholders and did a roadshow type of virtual roadshow anyway, pitching our story to these different institutional investors, and that really paid off. Before that financing closed, and we raised almost over $17 million from that offering. And before it closed, the stock had run up to $2. So, yeah, I mean, when you've just sold 10 million shares at 80 cents, and the stock moves to $2, you're going to see some profit taking in there. So, yeah, we're happy to see that stock being absorbed, some profit taking. We're happy to see our shareholders taking profits in the stock and new shareholders coming in, or at this point, shareholders that sold at higher prices coming back into the stock. So it's a natural process, and we're not unlike the rest of the group and gold stocks in general that have been seeing a pullback as gold has pulled back. Keep in mind that when our stock ran up, gold also ran up to almost $2,100. It's since pulled back to $1,900, and it doesn't really even appear that gold's necessarily finished its correction in here. But we think gold prices go higher, and when gold prices turn again, we think our stock is now poised to follow along, just like I did in May and June.
Okay. I want to get onto some of the deals that you've been doing, because you've been doing some nice deals. But I want to stick with the numbers side of things for a bit. You're on the TSXV on the OTC, and you're in France as well, it looks like. What are the plans for the NYSE? Because you're starting to become of a size which is interesting to generalist funds in the US. But you need to meet certain criteria and certain thresholds in terms of market cap, in terms of share price, etc. So what are the levers that you're hoping to be able to pull there? And in fact, is the NYSE an option for you?
Well, in the growth of the company, certainly the NYSE is an option. It really expands the shareholder base, especially in the U.S., where we're starting to, seeing a lot of attention. And of course, we are, for the most part, a Canadian company, and our primary listing is in Canada. Most of our assets are in the U.S. So, with the TSXV, we also graduated this year from the OTC QB to the OTC QX. So we're on the premier OTC exchange, not really exchange, it's a listing. And then, so as far as graduating to the NYSE, there's certain requirements that we'll have to meet, and we're working on those now. The first is, we have to file our annual information form and then a prospectus, which will allow us to do prospectus offerings and open us up to the possibility of an exchange listing. Now, at our current price, that would require a reverse of the stock, something that would require shareholder approval. So we think that is in the cards for us probably next year. We could possibly do it without the reverse split if the stock price were to increase. But it's some of our competitors have done this, and we think it's a natural evolution. But we are also a slow and steady kind of company. We're more conservative in the way we invest our money in the royalties that we invest in, and the prices we're willing to pay for royalties. And I think that carries over to our listing and moving to bigger exchanges. it will come, but we're not in a big hurry here today.
Okay. Given there's been a kind of rapid ascent, how's the headspace, how's the mentality around keeping things tight? You always said to me, both sets of interviews said to me, we're cautious with our money. We don't spend a lot. Our G&A is famously low. So is that changing or unraveling any?
Unraveling, yeah. Look, this year we have when the stock really started in late 2019, when our stock really started to take off, and we started making some key acquisitions the beginning of this year. We really needed to get out and tell the story. So we've tried a lot of things on the promotional side that has inflated our G&A, let's say. I mean, not too much has changed at the corporate level. We have added a few strategic advisors that we pay on a part-time basis for helping us with some of the Canadian and looking at other, possibly expanding into other jurisdictions. But for the most part, we're keeping the G&A down. We're not adding a lot of headcount there, but we have spent a lot of money in stock promotion, if you will, doing more things to get the word out, to get our story out. And we've tried a lot of things that going into next year, we kind of know now what works and what doesn't. And so we'll be back on our, I think, in a more conservative mode on the G&A, especially from the promotion side, going into next year.
Okay. Here's a question sent in. You ready for this? What's Trey's beef with Rick Rule?
My beef with Rick Rule?
Says here, black and white.
Oh, the question? No, I really don't have a beef with Rick Rule. I think that, I think I was posed a question here recently about Rick speaking about our high G&A and kind of listing us as an average in the way that he rates companies. And I find it a bit ironic that Rick invested in our company at 11 cents a share on about the 1st of January 2019. It was actually December 31st of 2018. He sold quite a bit of stock at 40 cents on the way up, and not sure if he has any stock left today or not, but a stock that was a legitimate, with his warrants, about a 15 bagger for him. I think probably the best performing stock in his portfolio, or it's certainly one of them. And the fact that then he'd come up with a 5 middle of the road rating for us, I think it's a bit unfair. And that you would think he'd at least give us kudos for being a high-ranking stock in his portfolio, regardless of G&A.
Okay, it's just a number. You're master of your own destiny, Trey, and I think your share price doesn't lie. Okay, can we start talking about some of the projects that you've been focused on and some of the royalties that you've been picking up? Because obviously we get the whole Nevada focus thing, and I think what we've seen is that some very average companies, before the gold price started picking up and sort of hitting their heights, are getting recognition perhaps they wouldn't have before. Do you feel that this cautious nature of yours is going to allow you to stick to what's important, stick to the fundamentals, or are you going to take advantage of the frothy market at the moment? I mean, how does it change the way you go about valuing something, I guess is what I'm asking.
Well, look, the frothy market, it did affect us. I have to say, when the gold stock or the gold price ran up, we had some transactions we were working on that the people moved away from the table and said, geez, Bank of America says gold's going to 3,000. We think you should pay us more money. And we said, no. probably one of those I wished I'd said yes, and one that I'm glad we said no. But with gold now pulling back, those people are coming back to the table, and look, there's a lot more competition now. I think more so than the gold price. What is really affecting the royalty market is there's a plethora of new companies popping up. I like to say they're like kind of like whack-a-moles, so we're seeing the space be more competitive, and for us, we haven't experienced too much of it yet, but we are seeing people, a couple of situations that we were involved in. I'm not sure we were ever going to win them, but in these, when people go out and there's actually a bidding process for these royalties, we're not going to overpay. The last time the market did that, some of the shareholders of some of the royalty companies from back 2011, 2012 are still getting even. We are kind of restrict ourselves. I mentioned before the size of transactions we're looking at, but also the valuation. In other words, today, if we're trading at 1 times our net asset value, for us to go out and pay 2 times net asset value just to purchase a new royalty is dilutive for our shareholders, and we don't think that's the right way to approach the business. Now, some of our competitors think that paying 2 times net asset value and maybe fudging the numbers so that they convince the market that maybe they're not paying that much. But we stick to our numbers, and we're actually pretty aggressive on rating the assets, but we're just not looking to do these dilutive transactions just for the sake of adding size and growing bigger.
Okay, okay.
We're going to stick with that.
Stick to your knitting. I agree with that. We when we look at royalty companies and how much they're paying for, that we kind of get a sense of where they truly think the gold market's going to go. Because if I ask a gold CEO, the gold's going to the moon and in double quick time as well. What's your take, if you don't mind, just talking about the macro momentarily? What's your take on where gold is going to go in the next 12 months? I think looking any further out would be probably madness.
Well, look, one of the beauties I always tell Jerry of running a gold company or gold royalty company is I very seldom do I make a call on the price of gold. I figure that if people are investing in our company, if they're interested in listening to our story, they want to be invested in gold. So unlike other commodities, you won't ever see us saying, geez, here's why you should own gold. Here's where gold's going. Here's how much gold you should have in your portfolio. I'll let everybody else, those people decide that. When the price of gold goes up, our shareholders are very happy. When the price of gold goes down, consequently, they don't blame me. They blame Goldman Sachs or the World Gold Council or the central banks or somebody for naked shorting or something. But having said that, look, we couldn't be in a better environment for gold. You have Federal Reserve here, central banks around the world printing money, a lot of stimulus and the amount of debt and the money supply growth has just been phenomenal. I mean, if you look back historically in the 80s and during World War II, when we saw money supply grow at 15% on an extended basis, we saw inflation over 10% and closer to 12. To give you an idea, the money supply right now in the last 12 months has grown over 35%. So we're in a whole new ball game. And that is all happening in an environment where the Federal Reserve and central banks around the world are also keeping interest rates very low. That interest rates, of course, is one of the things that competes with gold as an investment because gold doesn't pay dividends. So, you have a situation where we think inflation going into 2021 is going to be a front headline issue, and that the market's going to start focusing on that rather than jobs. And the job report every month, they're going to go back to following money supply and other indicators of inflation. So you certainly are in the right environment for gold to perform.
Yeah, I think that's definitely right. Let's come back to you. Your environment has changed too, in the sense that you're moving up this food chain. You've said yourself it's a bit more competitive. There's tenders now where perhaps at the lower end there wasn't so much attention down there, and there's a few companies coming up which are perhaps their valuations or the expectations of the market upon them are very different from where they were a year ago. So it's a different environment for you guys to be competitive. So when you say we are very tough in terms of how we value companies, I mean, if you're going to be able to win some of these tenders, let me put it this way: do you just want to bid for the sake of bidding? Do you want to win these tenders for the sake of because it tells the market that you're kind of growing this kind of scope and scale of the business, or is it really about the bottom line? I mean, how do you tackle it?
Well, look, we feel, as I said earlier, that in the junior royalty space, we'll put our current portfolio up against anyone's. And if we really think that's such a high quality portfolio, the idea of diluting that portfolio by paying more than our current price to net asset value for new assets, just for the sake of growth, doesn't make sense. And we are still able to find situations. We were able to purchase we announced a royalty purchase this morning, not a large one, but a very exciting play near our Marigold property. And so we think with gold pulling back here now, as I mentioned before, we had a couple deals that the price of gold running up to almost $2,100 kind of pushed those deals to the side. The bad news, we didn't get those deals done. The good news is we didn't get those deals done because here gold is pulling back, and we're sticking to our knitting, to our valuations, to our gold price forecasts. And not moving that forecast every time the price of gold ticks up. So, look, we think that we will continue to acquire royalties. You'll see us announcing deals on an ongoing basis here, I think, and we'll continue to grow this company. And along the way, we're going to get our share of the deals based more on our relationships and strategic acquisitions than participating in these processes where every company gets to go out and put a bid in, and then you get narrowed down to the top three, and then those get to resharpen their pencils. And this environment where a lot of royalty deals are being overpaid.
Yeah, so talk to me about the two things. You've obviously got Rick. You've got Rick Rowe. You do, but you've got Eric Sprott in there as an investor, and I want to understand, what facilities you've got available to you. Because Eric is maybe a source of capital, but he's also, he talks about connections and relationships there. Is he helping you advance your story, to push your story? Because he's involved in a lot of different companies. His money is spread far and wide. So what's the actual value of him to you as a management team?
Well, I think that having Eric on your team is invaluable. Being the only royalty company that Eric is invested in, certainly puts us in a position where we see opportunities or ideas. And while Eric's not really proactive in trying to put deals together for us, he certainly has ideas, and him being invested in other companies where there might be a royalty opportunity, it doesn't hurt us one bit. The fact that he's involved and a major shareholder in Ely Gold Royalties. This, of course, Eric late last year gave us a line of credit that allowed us to do the VEK transaction that brought in the Gold Strike, Ren, and the Amerigold royalties. Eric also sold us a 0.5% NSR on his Jarrett Canyon mine that he owned personally. I just can't. I just can't say enough about how invaluable it's been to have Eric on our team.
So where does this thing go from now? You've had a great run of it since we've been talking to you. August 19, 39 cents, 136 today. Nice run of it. Is there much more to happen? What more can happen?
Oh, I think, look, you'll see us, first of all, on the royalty generation side, we're probably more active than we've ever been. There is just with the gold market and the market for exploration juniors to be able to raise money again, the demand for our properties from exploration companies in Nevada. Like I said, it's at an all-time high in demand. And then on the royalty front, we're continuing to see opportunities, and we'll add royalties as we see them that fit in our and on the less expensive side, like the Marigold deal that we announced today. It's under $1 million transaction, so it won't fall into our key assets right now because it is a development asset and in a place where SSR Mining is expanding the Marigold mine, where we already have a royalty, so it just fits in our portfolio perfectly, and we're able to buy that at we think a very attractive price. So you'll see us doing more royalty transactions and bigger royalty transactions. They just what you won't see is us overpaying for those transactions.
Have you got any plans to kind of expand or increase the scale of the Landsman royalty generation part of the business, or does that start to fall by the wayside as a percentage?
Oh, I don't think it will ever fall by the wayside for us. It's an important part of our business for a few different reasons, but that longer term royalty generation model. Now, every royalty company you'll look at their portfolio, you'll see that they have a portfolio of exploration and development assets. The difference for us is that we manage that portfolio. For them, these are just things they've inherited or purchased along the way, and they have no idea, what kind of work's being done on them, and not proactive in providing data and support for the exploration company doing the work. You also won't see other companies that are out consolidating claim packages and putting old mining districts together. Good example is a deal we did this spring since we talked last with the Tonopah district. This is a famous mining district in Nevada that over the years we've done a series of transactions, and that ended with a large transaction this spring to buy in about 76 patented claims. We put an excellent package together. We optioned that to BlackRock Gold for $3 million over 4 years. And they've gone out. They've got 2 drill rigs turning on that right now. They've had some incredible bonanza high grade results. And it's turning into one of the hotter exploration stories really in the marketplace today. So, and that story, I could go down the list, but we repeated that time and time again in developing a portfolio of, if you look at our development assets that are at or near producing mines, the key to those and to a lot of the properties that we generate and sell is that if they're at or near a producing mine, our properties don't have to get big enough to warrant building a mine. In most cases, the mine is already there, or it's part of a project that it already has enough size to become a mine. So we may not have a royalty on the entire project, but we'll have a royalty on that, has a very good chance of coming into production over the next few years. And we'll see those royalties and those properties where we are actively managing that portfolio really bear fruit, not just be a bunch of lottery tickets, as a lot of companies have in their exploration portfolio.
No, I thought that was an interesting one. I think you saved BlackRock's bacon there, because I think their first project was not a economic success, and the Tonopah has just changed their fortunes dramatically. Well, look, Trey, let's wrap it up there. That's kind of good run through, good catch up, sort of scene setter. Perhaps you'll come on again before Christmas and sort of let us know how the year's ended up, or how things are progressing. Appreciate your time.
All right, great. Look, I appreciate the interview here. I think we, if anybody's interested in more of the story, you can go, I think on YouTube now. My most recent presentation that we did, a town hall meeting, is on there. The presentation, of course, is on the website, www.elygoldinc.com. And so I encourage people to learn the whole story here of what we're doing and see the value in investing in our company.